Hey, soldiers, who benefited from the collapse of Silicon Valley Bank and Signature Bank? Well, the answer to that question is very, very easy. You're a smart audience. You know that the big banks, the big banking institutions, they are benefiting mightily from the collapse of these small regional banks. Reason being is because, faith has been shattered. I got a email today from an institution I bank with, very small institution. And the tone of the email was, hey, look, don't paint us with that brush. We're not having problems over here. So if it's moving the CEO of these small, and CEOs rather, I hope you guys might be able to hear this wind. It is tremendous. Okay, we're having like a nor'easter over here, and the wind is just incredible. Anyway, you've got these folks that are these CEOs that have set about trying to restore confidence in their institutions. Meanwhile, I don't know how well it's working because a lot of deposits are flowing out of community banks and regional banks rather, and community banks also, flowing into the big boys. I tell you what, they win either coming and going, don't they? And look, they call these banks too big to fail. And part of the reason why they call them that is because they, have been given that moniker by the Treasury, by the Federal Reserve, and by most of the folks up in Congress. Now, never mind the fact that the concept of too big to fail is antithetical to true capitalism. I guess we have a form of capitalism that is, it's identifying as capitalism, and it can actually not be true capital. We can have a corporate welfare. We can have too big to fail, and it identifies as true capitalism. So we had the bailout. Yes, it was a bailout. We did see that all of the depositors over at the Silicon Valley Bank, they're going to be made whole. All right. They're well-connected folk over there. Probably be a lot different from me and you. If one of our little banks went belly up, we'd be, promised the $250 and about that $250,000 insurance from the FDIC. It's not like they cut you a check immediately and then you just go on about your business. No, they even said with this instance that they were going to give you part of the money and then write you receipts for the remaining part of your money. But then the government stepped in and said, hey, wait a minute. We're talking about Oprah Winfrey, Prince Harry, Roku, and several other large companies and very influential people. There's no way we can allow them to take an L. So at the same time, again, I said in the previous video, at the same time, we had the Wells Fargo so-called glitch going on where average people weren't able to get access to their direct deposit that they worked for, the previous week. But, Elizabeth Warren, she didn't say anything about that. She's out saying that the collapse of these banks is Trump's fault, okay? Lady, get a new shtick, okay? I mean, it's so boring and old. Look, I am not a Republican. I am not a Democrat. I am a conservative, okay? And I see fault in both parties. But God, these people walk around like true and utter non-player characters and just repeat these same tired ass lines. Meanwhile, the people get nowhere. I would like to see Elizabeth Warren put some of her energies into creating some legislation that says we're going to teach true financial acumen, true financial literacy rather, in the public school system. She's never going to do anything like that. This lady's very wealthy. She's made her money. Now she's going to attack every method that she used so that you can't use them to get wealthy and put herself up on this pedestal. All she has to do is get in front of a camera and say, Trump did it. And, she feels like she's doing something. It's disgusting. I'm so sick of these politicians. In any event, so they went ahead, and I don't think they would have bailed out signatures. I don't think they would have bailed out signatures depositors, but they had to because it happened so close on the heels of SVB. And I think that the reason why I think that is because Signature was kind of a crypto. They had a big crypto, presence. And look, Carstens over at the Bank of International Settlements. He said they're trying to shut down crypto. He feels as though they're winning, they being the central banks of the world and the governments of the world, are winning the battle. We just did the report on that a couple of weeks ago. So, yeah, I don't think they would have helped Signature if they could have helped it. Anyway, guy over there at Signature, former Congressman Barney Frank, he's coming out and he's saying that. He's saying, look, here's the deal. They engineered this. We were solvent. We could have worked this out. Is he right? Who knows? Okay. Former Representative Barney Frank, along with current Senator Elizabeth Warren, they are two key architects of the post-2008 system of Wall Street regulation. They're at odds over what's dragging down banks once again. Frank, who chaired the House Financial Services Committee in the wake of the global financial crisis and wrote sweeping new rules enacted in 2010, most recently served on the board of New York's Signature Bank, which regulators shut down on Sunday. From his front row seat, he blamed Signature's failure on a panic that began with last year's cryptocurrency collapse. His bank was one of the few that served the industry, compounded by a run triggered by the failure of tech-focused Silicon Valley Bank late last week. Frank disputes that a bipartisan regulatory rollback signed into law by former President Donald Trump in 2018 had anything to do with it, even if it was driven by a desire to ease regulation of mid-sized and regional banks like his own. So, contrary to Elizabeth Warren, he's out there saying, no. This thing was not started by Trump's legislation. And look, I'm not here trying to defend Trump on this point. I'm after the truth. And look, we've got these big banks benefiting. People are fleeing the regionals to get their deposits into the JP Morgan Chases, the Bank of America, I think they're allied with Bear Stearns, Wells Fargo. Frank goes on to say, I don't think that the legislation, Trump's 2018 legislation, I don't think that had any impact. They hadn't stopped examining banks. But Warren, a fellow Massachusetts Democrat who designed landmark consumer safeguards that ended up in Frank's 2010 banking law, is placing the blame firmly on the Trump-era changes that relaxed oversight of some banks and says Signature is a prime example of the fallout. Warren argues that had Congress and the Federal Reserve not rolled back stricter oversight, Silicon Valley Bank and Signature would have been better able to withstand financial shocks. Now, my question would be then, where were you, Warren, when all this was happening? You notice how she always, a lot of these politicians do this. They're down there in D.C. every day. They have the power to create legislation or, again, get in front of a mic and tell people, hey, look, this is what's going on. I think we should watch out for this. I don't recall her doing that. Okay, so she's being a political opportunist, which is something she does very, very well. They should have to meet higher capital standards. They should be subject to stress test. And she's right about that piece of it, the stress test piece, I agree. And they should have regular supervision that would catch exactly the kind of mistake the SVB made. Now, she is right about the stress test. But hey, lady, look, you're a senator. Why didn't you legislate that? I guess that was Trump's fault, too. The fact that she didn't act. All right, so Frank says that, look, I've been here since 2015, and the bank was in good shape. But we got hit with a run generated by the nervousness and beyond nervousness from SVB and crypto. Yeah, bad place to be. Bad timing for your positioning. Absolutely. The bank's digital assets business made the, quote, unfortunate victim of the panic that really goes back to FTX. We said that in the previous report. So FTX, yes, Sam Bankman-Fried rears his ugly head again. This is for all the people that say that he's got friends. And any friends he had, he's losing them at a prodigious clip. Frank said other lenders were in trouble the last few days, with the Federal Home Loan Bank telling Signature Bank when Signature applied for some money to tide it over, They applied for it on Friday. The Federal Home Loan Bank said they didn't have enough to go around because they were getting so many requests. Damn. So Signature, this is what it looks like when you get caught without a chair once the music stops. All right, so what do we have here? Oh, we got the blame game, of course, but we do have the big boys. The big banks, they are the banks you love to hate. Well, some people love to hate. I do recognize that banks serve a purpose. I don't play their game because I don't believe that a savings account is all that it's cracked up to be. We've done a lot of reporting on that. But look, the big boys are winning here. They're profiting from this event that occurred. Now look, on the Soldiers of Finance channel, we just don't sit around and grouse. Hey, if these big banks are getting bigger, hitch your wagon to a shooting star. And maybe you should do some due diligence and look into the stocks of the bigger banks, because it looks like the regionals will be under some stress and, looked at not too favorably for the foreseeable future. Maybe you can get in with the big banks and make some money with them, but you have to do your due diligence. Now, if you want more of my view on why savings accounts are not all they're cracked up to be and why you really shouldn't put much faith in a savings account, take a look at this report we did on the American Express high yield savings account. Okay, I think it's going to be very illuminating for you. Share it with a friend. Guys, subscribe, hit the thumbs up, and I will talk to you soon.